Hi and welcome to this live currency strength indicator table video. My name is John. I'll be taking you through the charts this Monday the 21st of November. So here you can see we have the live currency strength indicator tables in front of us. We have two types of tables. We have the trend traders table and the day traders table. These are showing the same studies but just highlighting different time frames. So the trend traders is our higher time frame and the day traders is our lower time frame. You can see here some of the currencies are highlighted in green. Those currencies show that there is a confluence between the two trading time frames, and those highlighted currencies are where we're going to be focusing on in our videos. The tables auto update every 15 minutes 24/7, so wherever you are in the world, you can access the live currency strength indicator tables and get the latest update. So what are they showing us today? Well, it shows that the New Zealand dollar still remains the strongest. That's been that way for quite some time now. If we go back to the rolling currency strength tables, you can see that if we just scroll all the way back, you can see that the New Zealand dollar has really continued its strength ever since it appeared on the charts. And as far as we can go back from the 24th of October, it's been saying that we should have been a potential buyer of the New Zealand dollar because it also appeared on the day traders as well. Now it has hopped off the day traders and come back on, but still remaining one of those strongest currencies. So we're either going to see that continue, or maybe we'll start to see it weaken and soften slightly. I think if we do start to see it drop from the day traders side of the table, then yeah, that could suggest that the Kiwi is starting to weaken slightly. However, it still features on the day traders table as the second strongest currency. So it's still something to potentially watch out for there. We can see that on the trend traders, we have the yen as the second strongest currency, followed by the Swiss franc, which is the third strongest currency. On the weak side of the table, we have the US dollar as W1, CAD as W2, and Euro as W3. From a day trader's point of view, we have the dollar as S1. So you can see the dollar features here twice. Is not highlighted in green because it's not showing a confluence between the two trading time frames. New Zealand dollar is S2, pound is S3, and then on the weak side for the day traders, the Aussie tops the table at W1, followed by the yen at W2. Again, yen appearing twice, but there's no confluence there, and then the euro at W3 on both those tables there. So really speaking, we should be focusing on euro kiwi. So let's go and take a look at that currency pair. Here you can see we've got Euro Kiwi up, we've got the monthly chart here. We want to take a look at that bigger picture narrative before we really dial in and have a look at what price is doing. And you can see that really speaking, this market has been in an overall range between the one spot 8550 handle and around about the one spot 59 handle. We have breached those levels in the past. You can see sort of the highs, the one spot 95.25, and you can see the lows here, the one spot 39.50 as well. They have breached those areas, but these couple of levels through here do seem to attract price quite often, so I've just highlighted those ones there. There are levels within that as well. We have the one spot 63 handle, which also acted as some support throughout this range. But basically, price really moving sideways ever since sort of the March 2011. We haven't really seen much in terms of long-term trend out of this currency pair. We've been pretty much sideways. So what does that give us? Well, if it's in a range and it's moving to the downside, could possibly we see price coming to the low of the range. So you can see here I've marked out the one spot 59 handle. Have drawn in a trend line as well, just to see if price would come into that area, hold, and if it does, then we can potentially look for a reversal forming there. But that's going to be months away if we're expecting that price to move to the downside. Jumping on to the weekly time frame, then we can see that price found resistance at the one spot 75.25 handle. That was a level that was above these recent swing highs. It's actually these lows back in September 2020 where prices come into and found some resistance, and you can see prices also falling to the downside ever since it's retested that level through there. Now we can argue price is making higher lows here, so we could suggest that maybe that is what price is going to do next. So we need to be careful of our minor support and resistance levels as well. So I'm going to go to the daily because price is doing something really interesting, and you can see that after that large sort of rally to the upside where we've come into that key resistance that we've just pointed out, we can see that price started to turn, making those lower low patterns and lower high patterns, and then we've pretty much consolidated between the one spot 67.50 handle and the one spot 70.25 handle on the daily chart. You can also see we have this nice confluence of trendline resistance coming through here as well. Now I have popped a trendline support just to see if we were seeing price coming into that connecting area, and we are. So we've got lots to discuss really here with what price could do next. Now the 200 MA is fairly flat, again kind of suggesting that the market is in that range bound environment, and we do have a minor level of support around about the one spot 65 handle. So if we were to see any kind of breakout from this recent consolidation, breakout of the one spot 67.50, even a breakout of this trendline support just through here, then the next area of interest I would say for price would be that one spot 65.50 or 65.22 where the 200 moving average is. So one spot 65 handle around that area would be of interest for breakout traders. I would look for that move. If price then trades through that level, then we know that we've got that trend line support running through that we marked up from our weekly time frame. Now trend traders may not want to jump onto the market here because we're at those swing lows. What you may want to wait for is price to sell off, confirm that the market trend is continuing that way, come back to trend line resistance as well as horizontal resistance, maybe around that one spot 67.50 handle, and wait for rejections from there. As a day trader though, you may want to consider that breakout. What you might want to look for is just go down to the likes of your 8-hour time frame. If price was to break through and close below this range here, that could give you that extended move down, which is around about 220 pips away. So definitely a healthy reward there if you were looking for that breakout opportunity. Okay, so keep that in mind for Euro Kiwi. Like I said, the market is in an overall range. I do think that if we did trade out of this minor consolidation level, then we could see price come down to that one spot 65 handle. Thanks for watching this video update. If you are looking to add the currency strength indicator tables to your trading toolbox to give you a focus of where the market is moving, then please head over to charlesclifton.co.uk. Here we run a trial period for £1 so you can see if the live currency strength indicator tables are for you. Thanks for watching this video update, and I look forward to speaking to you soon.